Hello and welcome to the Ottawa Real Estate Podcast on NPR. Oh, welcome back to the Ottawa Real Estate Podcast. Here we are. Sorry, I was looking at the wrong screen and we are back. Hello, everybody. Welcome to the Ottawa Real Estate Podcast, the go-to source for all things real estate in the vibrant capital city of Canada. I'm your host, Paul Stevenson, a seasoned mortgage agent, level 2, joined by the dynamic duo of real estate expertise, Greg Campbell, an accomplished realtor, and David Warren, also a mortgage agent, level 2. Together, we bring you an insider's perspective on the ever-evolving Ottawa real estate landscape.
Welcome to the Ottawa Real Estate Podcast. Join your hosts, Paul Stevenson, David Warren, and Greg Campbell, as they explore the world of real estate and mortgages. From the heart of Canada's capital to markets nationwide, and even a little beyond. Get ready for expert insights and hot topics.
Hello and welcome
Let's
to
get
the
started.
200th episode of the Ottawa Real Estate Podcast. Can you believe it? 200 episodes, market updates, expert advice, and great conversations. Whether you've been with us since episode 1 or just joined the ride, we can't thank you enough for your support. It's because of listeners like you that we've reached this incredible milestone. And before we dive in, I want to give a huge shout out and virtual hug to our amazing sponsors who help make this podcast possible. Gerté Poirier, Avocat, lawyers, your trusted legal experts, Big Insurance, protecting what matters most to you, and Centum Canada, helping Canadians achieve their home ownership dreams. Thank you for your partnership and ongoing support. Today, we're celebrating this milestone with reflections on the journey. No, we're not. We're just going to talk about what's happening in the market. Gentlemen, what's going on? How are we doing?
I think we should give a special thank out to Stephen Hopkins, too, our producer.
And
He's
Stephen
been with us
Hopkins,
for 200 episodes.
It's true. Yeah, I was looking back. I think Stephen came on like episode 27 or somewhere in there. It was like in that range. So before that, we were the Friday wrap up. Pretty hilarious. I sent a video yesterday about that. And here we are. You know, I think it's been 5 years now since we originally started. Because we were actually doing episodes before we started counting them as well.
Yeah, and before it was even YouTube, it was just
We were using
Facebook
Periscope,
Live,
Twitter.
off and on.
We had live bands for a while.
Musical
and
guests.
everything.
Yeah, musical guest.
Jason Coulson came on as a musical guest, and we had,
Yep.
oh, that was fun. Good time.
Yeah,
Good time.
that was fun. And now it's very serious. And now we're very serious.
I was looking at an old episode, and Dave was talking about the introduction of the stress test and how, you know, you were saying, you know, a variable rate right now is 1.45, but we're qualifying clients at 5.25. You know, it was just such a totally different market than where we're at now. Now the idea of a 5.25 qualifying rate sounds amazing. You know, that sounds like a gift.
Yeah.
So there you go. There you have it.
Times have changed. Times have changed.
Mood boosts.
Mood boost. That's it. Thanks for listening, everyone. So what's going on? How's the week? I know, Dave, you and I were talking about this off air, but it seems like there's been a real pickup. I don't know. Usually this kind of happens in kind of September, October, where everyone wants to get into the new home or get their transactions done before the holidays. But it seems like that was pushed now to kind of end of November, early December, because I've seen a lot of APSs come across my plate, a lot of calls, people getting pre-approved. There seems to be a lot of conversations happening.
Yeah, I this past week and a half has been like absolutely insane, I find. For purchases, refinances, people trying to get things done before the end of their fiscal year, like if they have a company or looking to wrap up debts or consolidate before the end of the year. Things coming up for renewal beginning of January. So if they got into their home, you know, kind of that push before Christmas, but their mortgage renewals are, you know, January 1st kind of thing. So there's a lot of that. But even just to your point, the APS is like, I think Friday alone was like 4 or 5, you know, different groups buying and all trying to close before Christmas, things like that. It's been, and first time home buyers, repeat buyers, not just one segment, but yeah, it's been pretty busy for sure. And this is not pumping the market. This is not pumping the market.
Yeah, we're talking about this after the fact. And it seems like the stuff I'm seeing too is people being like, we're going to see a home tomorrow. We love it. We want to put an offer in. Can you get us pre-approved? It's like everything seems like very urgent. Like people want to transact now. It's not like, oh, we're thinking about buying. It's like we found a home and we need it now. Or we found a home, our conditions are up Wednesday. Or what? Like everything seems to be like happening really quickly. And I don't know if that's just the temperature of the market or people want to get stuff done, but I got an APS last week with a December 19th closing. That's like, lender was super accommodating. Everything's worked. We already have it approved, signed. Like the lawyer's already been instructed within 3 days. Like everything is moving. But ideally, 4 weeks is nice. 5 weeks is better, but 3 weeks can happen. But it seems like they wanted to get into the home. Actually, funny, this was actually, they were buying a Minto build. And Minto basically told them, if you want the price that you're offering us, you have to close this year. So they basically made them close in 2024 to get that price. And Greg, I'm assuming this is because they have 2025 prices that they want to implement. And so they want to get them in the door this year. Is that like a common practice from builders, or have you heard of that?
The builders, what I can tell you about the builders right now is the discounts the builders have going now are going to be gone within 2 weeks. The ones that they had 4 weeks ago are already gone.
Mhm.
That was anyone who bought a new build in the last 4 weeks killed it. I haven't seen more new builds sell in a long time at the same time. Anyone who is looking now, so there's still an opportunity, but they're moving fast. They're trying to move inventory, get ready for the new releases that are going to come up. I haven't talked about it too much. I've only talked about it a little bit because, of course, we don't want to pump the market here on Torup. We talk about it after the fact instead of while it's happening now, because we're very mindful. We're very mindful here. Got to stop pleasing all these people. But yeah, that's definitely a thing. The prices on new builds, that ship has sailed. I think as soon as January hits, they're gonna, like, I know some of them are going up by almost like anywhere from $20,000 to $50,000, depending on what type of property it is, because the discounts that they've had right now are just like, we haven't seen them in so long. That's why all of them sold out. Like to get stacked townhomes to close end of early 2026, end of 2025 for like 55,000.
Mm-hmm.
I mean, that doesn't exist on a new product. Now those are already all gone, and before they were all gone, they'd bumped them up to 380 within 4 weeks. So yeah, that's what
this one was originally listed. I think it's 710, and they ended up getting it for under 680. And that was basically, and they were kind of going back and forth. It was kind of, which I hadn't seen so many like actual negotiations with the builder, like that they actually were able to knock that much off. But that was kind of their condition was, we'll do it, but you got to close in the next 3 weeks, basically. So yeah, I thought it was just, I think everyone wins in that case, but they'll be in their new home before Christmas, which is crazy when they just bought last week.
I would imagine the builders wanting to like register that revenue for that build in this year as well.
Sure.
Like like be able to recognize that revenue, and then to Greg's point, so that they're not in conflict with their price adjustments or price increases that they probably already have pegged from ages ago on a go-forward basis. But I mean, really, it's good info for people out there that are looking at new builds. What Greg's talking about, kind of the incentives that are out there, but also being able to negotiate right now with some of them. Not all of them, for sure. You're going to have some that are still selling really well, but if there's sitting inventory and it's been sitting for a while, have you and your realtor kind of engage that negotiation conversation.
And there are still some options. I mean, Mattamy still got some good deals on their new condos, mostly on the 1 bedrooms though. Those don't seem to sell as quickly, obviously. But if anyone's looking for any type of investment, or if you're just looking to get in, there's some definitely some good prices. You can reach out to me if you're interested in that.
Yes. Should we, Greg, I know you had some interesting numbers, but do you want to get into the news first? Or do you want to
Let's get into the news numbers. Numbers are news.
Numbers are news. Let's do it.
There's Canadian housing affordability. According to Better Dwelling, Canadian housing affordability won't return until 2035, later in Toronto and Vancouver. Falling mortgage rates and 30-year amortizations are expected to boost affordability early next year. The impact will be short-lived, since the excess leverage will help to raise home prices. As home prices rise and mortgage rates start to rise, that affordability boost is expected to fade. So Canada is still ranked as unaffordable, according to the Housing Affordability Index. Not too far off of affordable. The big ones at the end, you click there. Well, you click there. You look there. It says Toronto, Victoria, Vancouver, obviously at the top of it, just completely ridiculous. Ottawa is still in the affordable range for those haters out there who think that it isn't. Ottawa is still in the affordable range. And then you've got the smaller cities. My prediction is, again, this is my prediction. I think next year is going to be pretty, maybe 1% increase overall pricing, depending on where we end the year. I think a lot of these smaller towns, I think people that are serious about buying homes and wanting to own, I think are also getting into the mindset that they want to live in a smaller town.
Mhm.
I think these very affordable ones here are going to definitely see an uptick in newcomers from Canada as people flee the larger cities or the unaffordable cities, according to this chart. Slower population growth is expected to help slow rising prices, but affordability will take a long time to return. We still think it will take around a decade to restore housing affordability at the national level. That is insane. The epic combination of cheap credit, bailouts, and increased leverage will take its toll for some time. Their forecast sees affordability returning by 2035 for Canada in general. More expensive cities like Toronto and Vancouver forecast to stay out of reach indefinitely. I think that's fair. Also, that's 10 years from now. That's quite a while. So there's many things that could change that, but I like this projection. It's scary, but it's very real. I needed a bit of a real kick in the pants.
Yeah, I actually, to that point about moving to a smaller city, I had a client yesterday looking to get pre-approved, basically owns a home in Orleans valued at $550. It was a semi. And they were looking at a single family with a large lot in St. Isidore, also valued at $550. So basically like a lateral move, but huge like increase in size of property, size of land, etc. But willing to kind of move outside the city to kind of get more for his money, right? The other thing I was going to say is, when you look at the average home price right now being, let's say, $700,000 in Ottawa, if you look at the just kind of, let's say an insured, you're putting minimum down, you're getting an insured mortgage, your mortgage payment is upwards of $4,000 right now, which is, it's a lot of money. Like, if you're making as a family, let's say, you're both making $60,000 a year, $65,000 a year, on $130,000 a year income, paying $50,000 of that for just your housing costs, that's without property taxes, that's without heat, electricity, everything else included with that. That's a massive portion of your income just for the average home with an average income, So yeah, something's got to give. Something's got to give. I know we've been talking about this. I don't mean to flog a dead horse here, but it feels like something's got to give, Greg. Something's got to give.
Yeah, it's true. And there's priorities, right? Like, I mean, not everybody wants to spend that money. Like I've said this before too, we talk about getting something. And I'm just like, why? I'm like, why do we want anything bigger? I'm like, I can't justify spending, $5,000 a month.
Yeah.
Plus property tax, plus utilities, especially when, our family, we have our kids in like a private school, basically. So that's our priority. That's our investment right now. That's what we're investing into. And we think as a family that that's more important. It's more important for us than getting a new house and having more space. Where we are now, it's okay. It's big enough. It's a reasonable cost. But, we were talking about it last night, and I'm of the mindset I would move to a smaller town if it made sense to us. I don't think I'd move to Regina. Like it says as the most affordable. I would invest in Regina.
Yeah.
If you want to get into the market, get into some condos in Regina. I'm sure it's very realistic. I haven't looked at it, but I have some contacts out there. Everybody's just got to really, again, it always comes down to what is your priority. I was thinking the other day saying like, stop reading into all the data and just kind of look at where you need to be when you need to be there. There's so many people that just follow the numbers constantly and they just get so distracted by it that they forget about the whole purpose of why they wanted to buy a house in the first place.
Greg is your local Regina expert. If you need a Regina property, contact Greg.
Follow me to Regina. On my way.
Yeah.
My dad lived in Regina for a while.
Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Galtin Poirier Avocats Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at galtinpoirierlaw.ca. Let's get to the heart of your deal.
Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca.
Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big. Protect what matters most.
Speaking of affordability, we were discussing last week about the removal of the stress test and how this would basically create options and create competition for lenders and basically make it better for consumers.
On transfers. Sorry, on transfers only.
Transfers,
Uninsured transfers.
Sorry, yeah, stress test still exists. Only on transfers. Thank you, David. So I found this article this morning. Sorry, it was released yesterday, but I was reading it this morning and very interesting. I'll just give you the summary, but we were talking about before we came on air. Hilarious. Still, like, these things get released, these changes, and the left hand not only doesn't speak to the right hand, they don't even know they exist. It's kind of like they don't talk to any industry recessionals. They just throw out these rules.
They're spitting. They're not clapping.
There aren't any rules. They're guidelines. They throw out guidelines. They get for interpretation. Like there's no set rule. It's like they're not rule based. They're just like guidelines and hope that you interpret it as they are thinking you should. And if you don't, then they come and slap you.
Yeah. So basically in September of this year, OSFI, which is the Office of the Superintendent of Financial Institutions, they announced that on November 21st, which was, just over a week ago, that the mortgage stress test would no longer apply to uninsured straight mortgage switches between federally regulated financial institutions, provided there's no increase in the loan amount or the amortization period. So this was supposed to remove barriers for uninsured borrowers seeking better rates so that they're not stuck with their current lender. However, this is the best part. During a stakeholder Q&A session just before the policy took effect, OSFI Assistant Superintendent Tolga Yelkin clarified that this exemption applies only to transfers between FIs, which is the federally regulated financial institutions. So uninsured mortgages involving non-federally regulated institutions, those would be like provincially regulated credit unions, so Alterna, Meridian, and mortgage finance companies. So these are like, monoline or mortgage-focused lenders that we work with all the time, still remain subject to the stress test. So even after this was released, the lenders themselves weren't even sure, like, who qualified, who didn't, what's happening. Like, it's just a disaster. So then you have clients calling us asking how this works. And I mean, the governing bodies aren't even talking to each other, yet we're supposed to be giving professional advice about what these changes mean for people. So it's very hard to navigate on our end as well. And like I said, even the lenders that are taking these transfers were not fully in the loop as to whether or not they qualified. Now, they will say that the Competition Bureau notes that while 3 out of 4 Canadian borrowers are uninsured, only about 12% switch lenders at renewal, which is also mind-blowing.
12%?
12%.
Only 12%.
12.5%.
They don't shop. But we've talked about that ad nauseum in the past. People get their renewal offer. They don't shop.
Yeah, and they don't look at paper. But it's just bound to have a 12% number to go with that.
Yeah, and it's been just because they, sometimes they don't qualify elsewhere, or the stress test has inhibited them. But like for what Paul's mentioning, like the document they ever put out of their guideline for this never specified only the federally regulated, meaning basically your top 6 banks that people can only transfer between. Not being able to go to your Desjardins or whatever, like Paul was mentioning. And that's basically saying, like OSFI saying that we don't trust the way that the provinces provide guidelines or provide rules, or how the provincially regulated credit unions or institutions like underwrite their deals, which is also like a slap in the face to them. But all these institutions went back to OSFI, asked for clarity, and they're like, "Oh no, we put out our guidelines." Like, what? They-
Figure it out.
yeah, it's pretty bizarre that and it only came up in a Q&A. It wasn't even something where it was like outwardly spoken about prior to even the release of, or kind of prior to the November 21st launch date, which is just ridiculous. And talk about like stymieing competition.
Yeah.
The whole purpose of it was to give consumers the option of moving when they're up for
right.
and when they're a free agent, if you will. But now you're like only limiting them to your top 6 still. Really, it does not allow them for looking elsewhere or and shop for the best rates possible or the best terms for them.
In the article, it says more symbolic than impactful.
Mm-hmm. Because the big 6 are also the ones that have the biggest penalties.
That should be Canada's motto.
Right. Right.
Yeah, that should be Canada's motto. More symbolic, Canada. More symbolic than impactful.
Absolutely.
Another article I read today, which I thought was pretty neat. Headline: Equifax launches global consumer credit file to help newcomers build Canadian credit. So Equifax Canada has introduced a global consumer credit file, a solution designed to assist newcomers in establishing credit in Canada by utilizing their credit histories from their countries of origin. This initiative aims to facilitate access to essential services such as housing, credit cards, and mobile phone contracts, which often require robust credit history. The program initially incorporates credit information from India, reflecting the significant number of immigrants arriving from that country. Plans are underway to extend the service to include data from Brazil, Argentina, and Chile in the coming months, with a long-term goal of encompassing 18 countries. By providing lenders with a calibrated credit score that integrates international credit data, the global consumer credit file enables more informed lending decisions. And this approach promotes financial inclusion by allowing newcomers to access credit opportunities that might otherwise be unavailable due to a lack of domestic credit history.
I like that.
Yeah.
I've been in a lot of scenarios where people with like basically the equivalent of a 900 credit score in Canada from another country have not been able to buy something immediately, or it was extremely difficult for them to gain access to funding because they just didn't have something like this in place.
So typically they're looking for the new to Canada programs, which are insured programs through the 3 mortgagors. They're looking for typically 12 months bank statements showing that you've been paying your rent on time, a letter from your landlord stating that your, payments are on time, or, 12 months of utility bills or a cell phone bill being paid on time, things like that, to build that alternative credit profile. But people that come here, they already have money. They want to own right away. In a lot of cases, they don't want to wait that 12 months, or they don't have that full 12 months, or maybe they pay in cash on their rent, or they're staying with family or friends, and it's not coming out of their account. So they're not able to qualify under this. So this is going to be great for those individuals to be able to expedite that qualifying, like you mentioned.
Yeah. Finally, a great tool for other people to use.
Less symbolic, more impactful.
Less symbolic, actually impactful. Yeah. I know many people who would have benefited from this a couple of years ago.
Mm-hmm. Yeah, I agree. Last but not least, we were talking last week about the $250 bonus checks, checks for being a citizen. Bonus checks.
A little furry to slip a check that goes into your pocket, it goes right back out of your pocket.
Yeah,
tenfold
for the next 50 years.
Yeah, so this is actually funny enough. I got more comments from last episode about that like conversation we had than any other part of the whole episode, which is hilarious. Just talking about that bonus check. So here's the headline. It says mortgage borrowers will foot the bill for government GST cuts and other rebates. So in summary, while such initiatives can alleviate immediate financial burdens for households, they also inject more disposable income into the economy. This increased spending capability can drive up demands for goods and services, potentially exacerbating inflationary pressures. In an effort to control inflation, central banks such as Bank of Canada may respond by raising interest rates. These rate hikes affect borrowing costs across the board, including mortgages. For homeowners with variable rate mortgages, the impact can be immediate and significant, as their mortgage payments are directly tied to changes in the central bank's rate. Fixed mortgage holders might also face challenges when it comes time to renew their terms, as rates can be much higher than when their mortgages were initially secured. Ultimately, the interplay between fiscal policy, government tax and rebate measures, and monetary policy, central bank interest rate adjustments, means that the benefits of such government actions may be offset or even outweighed by the financial strain placed on borrowers. Guys, it's almost like we know what we're talking about. You know, that
It sounds like we're on the list or listen to our episode.
yeah. Yeah. But this is exactly, Dave, you were talking about this too. Like, Stephen, I don't know if you have the bond chart, but it's so, these things are so unpredictable. I find this has been the most like unpredictable rate market over the last 6 months that we've seen in forever. Like, you know, look at this bond chart. Like, even just in July, rates, like the bonds were super high, 3.6 roughly. They came all the way down to 2.6 in, you know, late September, early October. Then they went back up to, you know, 3.2 recently after the Bank of Canada announcement. And now they're back down at 2.9 as of this morning. So that impacts fixed rates directly. We've seen fixed rates go up in the last week, almost across the board, which is insane because everyone's waiting for rates to come down. Well, you know, we can only tell people so often that like there's no guarantee rates are coming down. Even the variable rate now, you know, the expectation is a 1/4 point, not a 1/2 point anymore because of the numbers that have come out in the last month. So like all of these things impact everyone's wallet, and adding what it was at 6 billion, Dave, or whatever they've just added to the deficit, like we're all paying for that, you know, like that $250 is literally a Band-Aid. It does nothing. It's like, yes, it's great the day you get it. And then for the next 10 years, you're paying.
It's not even great. It's irritating. It's fucking irritating. It's like, yay. Like, what do you do with that? Like, what do you really do with $250? Like, you know,
You got 2 pairs of shoes or a pair of shoes and a half.
2,500 is like, sure, you know, then then it's a CERB thing. But I mean,
Rent for a month.
that's something that you can do something with. But then, of course, they can't do that because then it's ridiculous, right? 250, man. It's like, you know, I saw interviews of people who are, you know, basically in poverty and they don't even want it. They're just like, that's just an insult. That's not even helping us at all. Like, make some real change so that we can live a healthier, better life. It's just absolutely bananas that they're doing something like this. And I don't even know, like, it's buying votes. Is it buying votes? I think it's making people hate the government even more.
Yeah, it's buying gas to gaslight us further. It's just
Right there.
buying more gasoline.
Thank you. More symbolic than impactful.
Exactly.
To exactly point, I'll be curious to see. We were talking about this before we came on that, you know, they announced this, but they don't actually have the votes in their party to be able to push this through. So they need the other parties to prop it up. So at the 250, which they've set out for anyone under $150,000 in income, so 19 million Canadians, 4.68 billion that's going to cost. The NDP came and said, well, we're not going to prop this up to pass it through. So it's still not passed yet.
Yeah.
Again, it's just posturing, not impactful, symbolic. But the NDP wanted for seniors and students as well. And so you add them in the mix, and that's where we're getting that 6 billion. It's probably going to push it north of 6 billion or in that 6 billion range to give, you know, again, additional 250, which isn't really changing anything for anybody other than slowing the decrease by the Bank of Canada. We just had the 6th consecutive quarter that the Canadian per capita GDP fell, which obviously for any economy like that should indicate and does indicate a technical recession,
Mm-hmm.
you know, but
Vibe
because
session,
we're not,
Dave. It's a vibe session.
because we're not able to, but this $250 is just delaying any sort of, you know, increased or supersized rate cut coming for December 11th. I'll be shocked if they do another 50 basis points. I think it'll be a 1/4 point. Most banks before this announcement were expecting another like a lot of them had it kind of in that 40-50% odds of a 50 basis point. I think it's so fucking stupid.
I think 0%, and then everyone's gonna panic, and they're either not gonna buy at all, or they're gonna go nuts and start buying like crazy in fear that it's gonna go back up.
Interesting.
I want to comment quickly on Stephen Hopkins' notes in the chat here. You know, we're talking about the businesses expecting to lose $1 billion due to the Canada Post strike.
Yeah.
Here they're giving handout, and then, you know, at 250, 1 week of groceries on us. Yeah, pretty much.
Right.
Sweet.
Yeah, I think it was something. I think it's already like 50 million or something that businesses have lost, small businesses, and it could be up to 1 billion that they could lose due to this, which is pretty wild when you think about it.
Did you guys hear? I don't know where. I just in passing somewhere this morning, I heard that Amazon might be going on strike. Did you hear that?
I did not.
Who said that?
Be a great buying opportunity though if they do. For their shares, I mean, not for nothing.
Say Paul's thinking options trading right now. That's all he's.
What to know about? Okay, no, I don't see that. Has Amazon gone on strike? Anyways,
Did you say strike? Strike.
Pride. Here they go now. Here they go tomorrow.
I like that.
Amazon workers strike. 5 things to know. Went on strike Black Friday demanding more pay. Oh, that might have been in the U.S. though. I think that was. Anyways.
When you're talking about the seniors and students, like to me, if you're going to give anyone $250, like they're the two most impacted demographics that could actually benefit from $250. Yes. Like if we know any seniors, we know all of them monitor their spending to the dollar. Like it's like, you know, they actually have like a checkbook with like 0.05 cents spent. Like that 250 will actually have an impact on them. Everyone that's, you know, in the 50 to what do you say, 150,000 range? Like that 250 is kind of like that's a week of groceries or whatever, right? It's like it's
if you're giving
that indefinitely.
Give $500 to 40,000 income earners of 50,000 under, or 40,000 under, and seniors.
Agree.
You know, or just 40,000 or 50. The people that actually need it. Like increase the amount that you're giving. Where to your point, it's going to make an impact in their life. Not 250. Steven even
seniors.
It's a week of groceries, if that, for a family. Like, you know, that's not serving anybody.
Family of two.
Yeah. But
yeah. I mean, let's see.
It happens.
I probably spend about $175 every 3 days on groceries. I mean, and granted, I'm not out looking for bargains, but I mean, I am looking while I'm out. If I see things that I like on sale, you know, I'll get them and I'll get more of them. Obviously, freeze that. But
funny, I'm so used to that. I'm such a
freeze that for the long term.
Yeah, my freezer's packed. Both my freezers are packed. I'm definitely a very pro Costco buyer now, but I had to make a stop at another grocery store yesterday just to pick up some grapes, and they were like $50 for a bag of grapes. I was like,
grapes are crazy, and we grapes all the time. We love grapes,
so I can 15 bags of grapes with that rebate check. So it'll be great. 15 bushels of grapes. Gentlemen, should we slide into the mood boost? What do you think?
Slide me in.
So we slide in.
Slither.
Oh, there we go. Okay, let's go 5 today. I'm going to extend it out here. Okay, number 1, just in honor of the 200th episode, we'll do a couple extra mood boosts. Number 1, what do you call a fish wearing a bow tie? Sophisticated. Sophisticated. And number 2, you guys know this. I used to hate facial hair. But then it grew on me.
Wow, yes.
And Greg, I have to say, your hair is looking phenomenal today. Very well balanced, very, very thick.
I'm enjoying my hair right now.
You're jealous.
Enjoying my hair and my style. My beard, I'm growing my beard out.
Yeah, it looks good. Looks good.
I'm anxious to see where it goes.
Number 3, why did the dad bring a ladder to the bar? He heard drinks were on the house. Number 4, told my wife she should embrace her mistakes. So she gave me a big hug.
And last but not least, always a pleasure. Always a pleasure with the boosts.
I'll stop there. The last one's not good. So there you go. That's the end of the boost.
I'd say that was 4. That was a 4 for 4.
Yeah.
Those were all pretty good.
Wow.
Yeah.
You know what? The government should slide some mood boosts in their rebate checks just to boost everyone's mood.
Yeah, right.
It's like a set for check and then attach some mood boosts underneath it. You know, it's like the tearaway. Oh boy.
Man.
Oh boy. Well, gentlemen, it's been quite the ride. 200. Here's your 200 more. This is actually, we should have said this at the beginning, but this will be our last recorded episode of the year. We're going to do I think a live, might be recorded. We're not sure. We're going to do a holiday special before the end of the year, kind of recapping the year, and we should reflect on all of our predictions that we made first episode of the year. That would be fun. And we may even have some guests. There'll definitely be some mocktails involved.
I was going to say, and definitely cocktails. So you'll get a different view of things potentially.
Yes.
We'll say what's really on our minds because we don't know
more
we're
cynical than we already are.
Yeah, it'll be the raw, uncut toe rep with scotch. All right, everyone. Happy December, and we'll see you soon. Thank you for your listening. We love you.
Cheers.
Bye.